Hello, my name is Si Wing Yi. My special guest is Richard Atbani from Guarantee Rate Mortgage. Richard is one of the country's leading investment loan agent who does investment loans in all 50 states. He did it for more than 10 years, and he has helped many investors to buy cash flow turnkey properties in the best real estate markets in the country. Richard, without further ado, let me share my screen and let's go over this scenario, cash flow properties in affordable markets. Typically, investors right now are presented with several scenarios, several investment properties. This sample property right here is in a Midwest market. Good cash flow over the years, has been a stable market. Investors have purchased in Midwest markets mainly for positive cash flow, but still getting some appreciation. Let me go over this property, single family home, rehab property, $73,000, or rehab turnkey, renters already. So at 25% down payment with the investment loan rate of approximately 6.5 to 7.5%. Idea is to at least have a good positive cash flow. That's the benchmark, positive cash flow monthly. The other investment market that most out-of-state turnkey investors go with are new construction in more expensive price point in a fast-growing market in the South and Southeast, mainly in Texas and Florida, in North Carolina, and a few other places. These new construction typically are low to mid 300s, rents for 2,300, even at an investment loan rate of 6 to 7.5%. If you crunch the numbers, a typical investor will get around a couple of $100 monthly positive cash flow. With that said, since Richard have worked with many real estate investors from out of state to buy cash flow properties, given today's economic and challenging housing environment, here's the assumptions. The assumptions are in the next 3 to 5 years, investor mortgage rate is around 6 to 7%, give or take. The assumption is housing market is flat, little to no appreciation in the next 3 to 5 years. Investor A, having analyzed what's going on, are still sitting on the sidelines for the next 3 to 5 years, waiting for 50% housing crash or whatever, give or take, and waiting for mortgage rate to come down to 2 to 3%. Investor B, however, decided to buy right now with 20 to 25% down payment with a little bit of cash flow moving forward. Richard, share your thoughts. How will this scenario play out in the next 3 to 5 years from a high level?
Waiting on the sidelines isn't really going to get you anywhere. I personally don't see us encountering a crash like we did in 2008. Keep in mind that at that time, you can get a 100% financing loan with a heartbeat, not even a good credit score, no income documentation, right? It was the Wild West. People didn't have any investment in these homes they were buying either, right? If you're putting no money down and the house goes upside down, it makes it very easy to just walk away. Where we are in today's market is much different. First, those crazy mortgage guidelines are gone. For the last 12 or 13 years, you've had to provide full income documentation, and most everyone in their homes should be in their homes and qualified for their homes based on these new government guidelines. The other thing to keep in mind is the amount of household equity in people's homes is the highest amount ever. People have more equity than ever before. People also had the lowest rates than ever before, right? Most people are locked in under 3.5%. So how many of those people are going to sell and have to buy a house at 6.5 or 7%? Or how many of those people are going to strip all their equity and cash out to go buy boats and planes? Not many, because once again, they're at sub 3.5% rates. The notion that we're going to have this major crash and people are waiting for 50%. You and I have been hearing that for 6 or 7 years, right? Everyone's like, we're way overdue for this massive correction and crash. However, the important thing to note is the thing that has led to real estate being as strong as it is the last 6 or 7 years isn't silly loan programs that create an artificial demand that allow people to buy that wouldn't normally be able to buy. It happened in 2008. It is, though, purely because of supply and demand. And nationally, we're short 6.5 million homes across the country. And that number last year, when we did a podcast, was 5 million. So you're like, oh, 6.5 million homes. It doesn't sound that bad. That's horrible, especially because that number is increasing because we're still not building enough at the moment to meet the overall demand. For that investor who's waiting for a crash or trying to time things, You're going to be waiting a long while. I'm sure you were waiting as soon as COVID hit and people didn't need to make their rent payments. You're like, oh, this is going to be my year, right? Things are going to crash. I'm going to buy it. What happened? Values went up over 30% nationally. Rents went up about the same. And now you're deeper sitting on that fence, waiting for things to happen. And they're not going to happen. And don't listen to me and don't listen to Seaway, but maybe listen to Warren Buffett. You sitting on the sidelines isn't going to get you anywhere. And trying to time the market is going to cost you. Talk about, for example, investing in the stock market. He says consistently invest in index funds and don't try to time it. That logic applies the same thing to real estate. Everyone who's been trying to time it the last 3 or 4 years have lost out on substantial amount of equity, substantial amount of returns. And also, I think the most important thing to keep in mind is investor that is going to still purchase. Look, I'm not buying this home for the next 1 year or 2 years or 3 years or even 4 years. Now, some of you may have a 6-7 year exit strategy. Mine's 15 to 20 years if I ever sell. So look, people ask, what happens if I buy now or you buy now and values go down in the coming years? I don't see this big crash coming, right? If you look at the fundamentals, you look at all the statistics, you look at the amount of equity people have, there's no big crash coming. But is there a correction coming? Have values gone down 5% nationally in the last year? No, actually. They've gone down 0.1% as of January nationally. So don't believe the headlines. But also, I don't think we're going to be in a position where in the next 2 or 3 years, we see anything more than a 5%, 8%, 10%, even a 12% contraction or leveling in prices. That may not happen even, right? We expected to see that by now based on what's happening in the market, but that may not happen. But even if there is a 10 to 12% price reduction, once again, I don't care. I'm not selling it next year, right? Who cares what some guy writes on a piece of paper and tells me the home is worth? Because I'm not trying to sell. It's irrelevant. And I think once you as an investor cross that bridge and realize that it doesn't matter if it goes down a little after I buy, because I'm not trying to sell, then it makes it easier to get off that fence. You see a lot of argument about investors and buying properties and people have to rent them and they can afford to buy on their own. And all this noise about, is it affordable enough? Should investors be able to go and buy as many homes as we do? If you go through all that noise, bottom line is there's not enough roofs over heads. Now, whether I buy the home as an investor or someone who's renting was able to go buy that same home, it doesn't change the fact that there's not enough of those homes, whether someone's renting or buying. And once again, as we said earlier, that is not going to change. That's not going to solve itself, even in the next decade. Value and scarcity is what creates, scarcity is what creates value, and supply and demand. And there's scarcity in the real estate market. There's tons of demand, but not lots of supply. Just look at economics 101. You don't need this complex investment background or tons of experience to rentals to know 1 + 1 = 2.
Yep, I agree. So here's my take on it. The next 3 to 5 years, the investor B who decided to buy right now, yes, the cash flow is not as high as before a few years back, but still cash flow nevertheless. In the next 3 to 5 years, the investor to take action to buy right now, not only their cash flow should increase over time due to inflation, they can increase their rent, so the rental income, the passive income can increase. The investor get the multi-dimensional asset class benefits associated with owning an income property, naming they're getting tax benefits, depreciation write-offs, potentially equity growth over time, and then debt pay down. The tenant going to pay down the debt more, the underlying mortgage. So multi-dimensional benefit, even with limited cash flow, limited appreciation in the next few years. Even if the worst case scenario, investment loan rate 6 to 7%, regular mortgage rate still are elevated in the next few years. Still makes sense to buy because the philosophy, there are so many philosophies. You buy real estate and wait instead of to wait to buy real estate. One more we could segue into just a little bit different. I've been talking, you and I, lately, given what's going on right now with interest rate still being elevated high right now, 6.7%, whatever. I'm talking to my network partners in many markets in California, in the Bay Area, San Francisco, where I live, and Las Vegas, in Florida, and in Texas. You know what they've been telling me right now? Do not believe the negative headlines out there. The entry level homes, if you look at those hot markets throughout the country, the Sun Belt market, the entry level homes, whatever they are, the medium price of homes, if any person that want to buy entry level homes like $200,000 to $400,000 single family homes in those markets, doesn't matter where. Again, North Carolina, Florida, Texas, Las Vegas, Boise, California. You know what I'm saying? I'm sure you will validate same thing when you talk to your network partners, Richard. I'm seeing bidding wars. I'm seeing multiple offers, 5 to 10 offers per property, bidding war, like 5 to 10 offers, and then people overbidding 5 to 10% over list price right now on those entry level homes, the most desirable homes that are desired by real estate investors. They are desired by first time home buyers. They are desired by move up buyers as well. So that's what I'm seeing. So even at a mortgage rate at almost 7%, we are still seeing this spring market do very lot of frenzy of activities. Imagine if the mortgage rate comes down from 6.7% right now to 6% or even 5.5% later this year. We're going to see.
It's almost there.
Yeah, we're almost there. So the key is right now, it's perfect time because right now there's very little competition. You can, as a buyer, as an investor, whatever who you are, it's a great time to buy because you're not competing against other people. And then instead of wait until the market frenzy occur, whatever later, then you'll be competing against a whole bunch of people. Then you're not going to get the deals that you want. You and I like to tell our investors to pull the trigger as quickly as possible because things are going to hit the fan in a good way later on. What have you been hearing from your people in those markets?
The overall feeling in the market and what they're seeing in their local demographic is not what you're reading in the headlines. They don't have tons of inventory sitting around. And also on top of that, they're seeing a major uptick as of this year, right? Things were a little slow towards the last quarter of last year as people were kind of wading their way through all the information and news. But as things have settled from last year, this year's there's been a huge influx of investors coming in to purchase properties. And a lot of that is relating to rates coming off of the highs that we experienced towards the third quarter of last year. They came down up until about a week and a half ago, and then about a month ago, and then they started rallying upward sharply. And I'm sure we'll get into a specific segment here about what's happening with the bank failures and the impact that's having on interest rates. But as of the last 7 business days, rates are down over 0.5%, and they continue dropping with the reduction in the Treasury bonds. So I'm sure we'll cover more.
Another module, we will cover more about that because of a severe lack of inventory all over the country, especially entry-level homes. We have like anywhere from 1/3 to 1/4 of all the potential buyers right now. They're buying with cash. They don't care about the interest rate. There are a large portion of the current buyers right now that have at least 50% down payment. They're very well qualified. People say, yeah, we are at the historical low home affordability. A lot of people can't afford to buy houses there these days. We've been hearing that. But at the same time, you could have a lot of people that could afford it because the inventory across the board is down to a historical low. You will find qualified buyers that are still willing to buy regardless of the mortgage rate, regardless of the 6 or 7%. They don't care. They bypass that because they like the housing stock. They like the long-term attractiveness of buying investment properties and regular houses. What's your final thought on that?
Same thing we always recap with, right? Get off the fence if you're interested in investing in real estate. I'm sure you can attest. If you are one of those people, you probably keep kicking yourself because it gets longer and longer in your head that you need to sit on the fence because you keep missing the boat. Get off that fence, because 8 months from now, you're going to be looking back again and being like, you know what, I should have done something. It's fun and interesting working with new investors because you and I see the light bulb that goes off once they finally get off the fence and buy their first one. It moves very quickly after that. It's cool seeing the spark go off with people because they buy that first one, they let it marinate for a month or two, and then from there, they move very quickly. And we see it all the time. Most of the general sentiment of those people is, we should have done that sooner.
That's right. It's a vicious cycle. It's always going to be like this. Human behavior is very challenging. So thank you so much. We'll see you guys next time. Have a nice day. Bye-bye.